Hello everyone, welcome to this short educational video of Alpha Trade Zone. In this video I'm going to explain a rather simple but very effective trading strategy. It's called the pin bar trading strategy. Let me just first explain what is a pin bar candle. So there's two types of pin bar candles. There's a bullish pin bar and a bearish pin bar. The candles basically they consist of a very long wick. The bullish pin bar candle, it has a very long wick below the candle body, and it could probably also have a small wick above the candle body. The bearish pin bar candle is vice versa. It has a small body at the bottom of the candle with the possibility to have a small wick even below the candle body and a large wick above it. We're generally looking for bullish pin bar candles at the bottom, at the end of a local downtrend, or for bearish pin bar candles at the top of a local uptrend, so that we can determine the reversal levels. There's also the possibility of those candles to have a bit larger bodies, but in order to include such a candlestick in our strategy, we need to have a very strong confluence with other levels as well. Generally, the rule is that we're looking for the wicks, for the large wicks, to be at least 3 to 4 times the size of the candle's bodies. So how do we define an entry and an exit on a trading setup based on this candle strategy? Let's just go to the BTC chart over there. There is an example I have picked up for you, which happened yesterday, and it was a very clear example of how this strategy is working. We did this live as a trade on our premium group. Just because it was a very interesting example, I decided to show it to you guys on how to frame your trading setups in a very easy and effective way. What we had yesterday was we had this hourly candle at the end of a local downtrend, and basically just before we enter a trade, we want to have a confluence between a few other levels. We don't only look for the single pin bar candle, but we also want it to have a confluence with another level, like a Fibonacci support or resistance level, or a local support or resistance level. So in our case, what we have is this local liquidity level that was broken over here. Let me just frame it on the chart. So we have this. So that pin bar candle has actually broken over here and closed below the swing low over here. What else do we have? We have horizontal support right here around those candles. So the candle is closing above this support. And what else do we have? There is a triple confluence, because let me show you guys. That's a Fibonacci retracement tool from the bottom to the top. And actually the 50% Fibonacci retracement is also around this candle body. So in this situation we have a triple confluence, and this leads us to believe that this candle has the high probability to form a setup that has a high chance to play out. How do we frame an entry when we spot such a setup? The best way to refine an entry, of course, when we spot a setup on a given time frame, is to go to a lower time frame and see if we can get a better entry. So in our example, we have the 1 hour chart. We are going to switch a bit lower to the 15 minutes time frame. So what do we have on the 15 minutes time frame? We have amazingly a very similar setup right here. We are going to look at that candle. It is actually the same candle. It's a pin bar candle that is formed around the critical support level. So this candle body has closed above the swing low, This is also forming a swing failure pattern. So we are going to frame a trading setup that is based on entering around this candle. So what choices do we have for entry? Of course, the first choice to frame an entry is to enter a trade immediately after this candle has closed. So that's going to be our entry. And the second possible entry option is to enter at around the 50% retracement level from the bottom of the wick to the top of the wick of the last pin bar candle, which in our case would mean that we should be positioning our entries at around 6,641. Because what I have observed is that pretty often the price tends to, after this candle has closed, the price tends to retrace to 50% of the size of the previous candle and then jump back up to the chart. So the optimal entry for our setups would be to enter 50% over here if we don't have time to wait, or we don't want to wait for this or to miss out the price action going to the upside, and place a second entry order at the 50% retracement of the candle. This would give us a better risk to reward entry when entering the trade by lowering our average entry price. So one of the first things to ask before we enter a trade, of course, is where am I wrong? And in this kind of setups, the invalidation level is usually a little bit or right after the bottom of the candlestick wick. So this would frame our setup like this. We enter at 50% and the invalidation is around, in our case, just a little bit below. It is around $6,606. So once we have entered the trade, we have estimated our risk and we need to define our target zone. Usually in such setups, the target zones for the setup will be the first trouble area or the first supply zone on the time frame that we are entering the trade. As we notice over here, we have this resistance level that has produced reactions in the past, which is right about here on those wicks, and it coincides with that little supply zone that I'm about to mark on the chart. Supply zone is the last bullish candle before a big move down, so it's going to look like this on the chart. Let me just fix the setup right here. So that's the supply zone. That's the supply zone right here. And we have this as a target. This actually provides us with a setup that has close to 5 risk to reward ratio, which is a pretty good risk to reward ratio. If we want to play this setup, it should look like this. So when we have framed this setup, let's just see how the price responds. It basically hits the target zone right away without any retracement to the 50% of the candle body, which means that in our case we would have gotten, if we enter right after the candlestick closes, we would still have gotten 50% of our setups. So we notice that the price is hitting our target level, and after that it's retracing back to close to our entry point. Similar setups, of course, they look on the bullish side, but similar setups also we may be taking on the bearish side, as pin bar candles, they also tend to form around reversal levels at the end of a local uptrend. A similar setup, we should be looking, of course, at the price chart so that we can find a similar setup. In our case, I will be trying to find one on the chart where it will illustrate a similar chart, and here it is. At the end of this local uptrend, we notice right here. Let me just start the replay over so that we can move over there and see how this played out, since we spotted this candle at a local top of an uptrend. So we start right here. So the proper entry would be after the end, after this candle has closed. We draw the Fibonacci retracement, so our entry is right here at 6831, and another entry around the candlestick 50% retracement at around 6868. And let's frame the setup. Short position, the average entry should be around here, with invalidation slightly above the end of the wick. So where would be our first target zone? It would be right here, right at the first consolidation area, and demand zone. Over here we also have a supply, and of course a second target profit would be right here at the top of this wick, because that's a probable bounce area. So let's just see how it's going to play out. The next candle, if you look right here, this candle retraced right at the 50% retracement of this pin bar candle at the top of the uptrend. And what has happened right after that, right on the next candle, we have actually reached our first target where we're taking profit. And just so that we are convinced that we're taking a proper setup, we should be looking at the risk to reward ratio on our setups to be at least 2, which means that we're risking 1% of our capital to win 2%, and that's the minimum popular requirement for a correct trading setup to be framed on. This strategy is fairly easy to apply if you just follow those simple rules. It can be applied to any asset, not only to BTC, but on any altcoin, or any financial instrument. If you backtest this strategy, it has fairly good chance to play out. So practice it first, try for yourself, and you will just see how easy it is to frame trades based on this very easy strategy to apply. Don't forget to click the like button and subscribe to our channel for future videos on education and different trading strategies with us. Thank you guys.